Good morning, everyone. This is Pankaj Rathi from Almus Risk Consulting for Market Mornings. The risk sentiment in global markets remained steady after some of the Fed members, including the known hawks like James Bullard, was seen playing down series of the rate hikes by the Fed. And the probability of a 50 basis point rate hike is down to 16% from a 32% last week. Yields have been also steadily dropping, which were further influenced by the ADP private job reports showing loss of 3,01,000 jobs versus expectation of a 2,07,000 positive number. The shocking decline may be possibly due to Omicron effect and likely to reverse in coming months. But this also should mean that we will see a slightly lower non-farm payroll data on Friday. We should also remember that job openings are still quite high in the US, and it is if the job quits and reluctance of laborers to rejoin due to the fears of infection that is showing lower numbers. Being a temporary phenomena, it is unlikely to deter Fed from raising rates in March. Oil prices have stayed near 7-year highs after OPEC decided to stick to its earlier projection planned output increase in March, despite pressure on a top consuming countries to raise productions more quickly. Brazil hiked their policy rates by 150 basis to 10.75%, eighth straight rise from the pandemic low of 2%, a major shift. Today morning, Asian currencies are weaker on account of there's a Facebook result came after post-markets, US markets closed, and that had a significant down number. Markets reacted strongly by 20% lower in Facebook. Due to that reason, S&P equity futures are also down, and that led to weakness in Korean won and CNH, which is both are weaker by 0.3% approx. Indian 10-year benchmark bond yield hardened further and could closed at 6.88% against the previous close of 6.82%. Bond is continue to move between 680 to 695 in coming days before MPC outcome, which is due in the next week. That's all from me.
Okay, hi, morning. This is Shikhar Garg filling in for Mr. Jairam Krishnamurthy today. And as all the markets are having a good hot topic of discussion on inflation, we are all aware, all authorities were aware, central banks were aware that inflation is coming. And the latest central bank to come under pressure would be the ECB with record highs of 5.1% inflation in the month of Jan. Now, traders have already started to discount a rate hike for ECB. But if we see, BOE can be one of the major central banks to start off with a rate hike with today's meeting itself. On the other hand, Yellen was found maintaining the fact that Biden's stimulus package was required and it was not or it may not be directly involved in fueling the fastest rise in inflation of the 40 years period. Now, she continues that there are many much weaker economies, but with higher inflation, and they're still continuing to manage that. On the inflation front, we all know the major reasons can be the increase in demand, probably shifting from services towards the goods, but also the supply chain bottlenecks, geopolitical tensions, and other reasons. For the crypto markets, if we have to talk about, Japanese crypto markets are now trying to make easier lives for the exchanges by making it easier to list digital tokens on their exchanges. Lesser screening time, faster listing process, they can bring around a lot of difference in the crypto exchange trading. On the domestic front, Rupee is trading with slight weakening bias, still feeling the impact of higher fiscal deficit and the borrowing by the government, which has pushed the yields to 2.5-year high. Neither the strong bullish sentiment in equities post growth oriented budget nor the weakness in dollar index has influenced the rupee move much. Even as the markets await further clarifications on the government's disinvestment plans, rupee is expected to trade between the range of 74.50 to 75.10, 75.15 levels, with any substantial weakness likely to meet by the central bank's intervention. That's it for today. Thank you. Have a good day.